Hello there, you're welcome to the program. This afternoon on the bulletin, the Bank of Ghana hints of more punitive actions against staff of banks and financial institutions engaged in fraud within the banking sector.
You, the institution, will have to write your own will by telling the public that I've been sanctioned by the central bank. It's even more than the central bank putting your name out there. You are telling the public that I have been sanctioned by the central bank. What is more punitive than you yourself reporting yourself?
Also in the bulletin, ENI sues the government of Ghana over the unitization with its counterparts here in Ghana. We have details of this developing story as government is yet to respond to these legal suits. Also in the bulletin, Nigeria leads Africa with cryptocurrency transactions totaling over $684 million as at December last year. We'll assess the potential of this eruptive yet unregulated market on Ghana and other regional markets. Hello once again, we have all these stories and more coming up shortly after this break this day.
What's up, guys? My name is Sammy Forson, host of the Weekend City Show and Ignition right here on Joy 99.7 FM. Well, anytime you happen to be busy and you miss out on your favorite shows right here on Joy FM, here's what you can do. Log on to myjoyonline.com/podcast. Just go on there and you'll find all your shows on demand 24/7. There you can catch up. Remember, Joy FM remains your radio for discerning listeners.
Joy 99.7.
Hello and welcome. The Bank of Ghana has indicated it will not hesitate to roll out tougher sanctions against recalcitrant banks and financial institutions caught in fraud-related activity. It's coming after a recent Bank of Ghana report shows that an increase in fraud-related activity as well as value increasing from 115 to 1 billion cedis. The report shows that more than half of bank staff aided these fraud cases. There are, however, concerns that enough is not being done to serve as a deterrent to others. Dr. Joseph Franz is head of financial stability at the central bank.
The focus is that all the chains, the value chain of the providers, service providers, as against the fraudsters, must be tight. So there won't be any weak link in that value chain. And that is the essence. And that is what we are focusing on, to get the value chain have one goal congruence and also watertight niche. Yeah.
But away from the publication of the report, again, are we going to see BOG move on to take sudden actions against the recalcitrant financial institutions that you will see that it's still picking up in terms of these fraud cases? Because some are saying that it appears that even though this report has come out consistently, we've seen certain areas picking up.
The Bank of Ghana certainly, regulates the system and then ensures that the right things are done. So institutions that do not obviously do the right things are sanctioned by the Bank of Ghana. The Bank of Ghana sanctions the institutions as we speak. We don't wait for this report we sanction the institutions over and over when certain infractions come up. So yes, of course, we do sanction institutions as they fall foul.
Penalty units and financial sanctions. Are we going to see a situation where we move, because some are saying that some of these banks are quite strong financially, that those penalty units might do little to shake them, if I should use that expression?
No, pecuniary sanctions are not, most of the banks do not really even value the pecuniary sanctions. They look at whether they have been sanctioned, even if it's a warning letter. They look at, have we been warned, have we been sanctioned? Then they value it in terms of reputational damage that the institution might have. Can you imagine if we had put names of institutions on this report, the reputational damage that they could have? So when you are sanctioned, and of course you are sanctioned and the central bank tells you that when you are sanctioned in your financial statements, put there that you have been sanctioned by the central bank. And that's what happens. If you look at the financial statements of banks, there is a portion for whether the institution has been sanctioned or not. So of course, somebody like you will want to find out why were they sanctioned, and that alone is what the banks will want to avoid, and not necessarily how much I paid for being sanctioned.
And as you speak right now, is that being enforced by these financial institutions and banks? If your department recommends that Georgia Bank should be sanctioned, am I supposed to capture that in my financial statement?
Of course, yes. You look at the financial statements, both the audited and unaudited. There's a portion whether an institution has been sanctioned. If nothing is there, then the institution has not been sanctioned. But if the institution has been sanctioned for one infraction or the other, that is there. And all the reports come to us. The financial statements, we see them. So if an institution has been sanctioned, yes, we cross-check.
Are we going to move to a situation where maybe we name and shame? And I know one of your department's core responsibilities to ensure that the system is quite safe and sound. But will we get to a situation where you, the regulator, would not hesitate to name and shame? And if that also, moving on, maybe possible license withdrawal?
Well, we are above even the regulator. This is where you, the institution, will have to write your own will by telling the public that I've been sanctioned by the central bank. It's even more than the central bank putting your name out there. You are telling the public that I have been sanctioned by the central bank. What is more punitive than you yourself reporting yourself? So that is where the world is going to, and that is what they are doing. And we'll continue to do that. We'll continue to enforce that directive.
Would you look at the option of possible name and shame as well?
Well, once an institution has named itself and shamed itself, why should I come and tell the public again? We ensure that the institution themselves will tell the public that, yes, we have been sanctioned. And that is enough as far as we are concerned. That is even more punitive than the central bank coming to name one institution or the other.
And we'll see how that goes. But let's now delve into an area in the financial market which is much more controversial. More cryptocurrency trading goes on in Nigeria than almost anywhere else globally, reflecting a loss of faith in more traditional forms of investment. A Bitcoin trading platform, Paxful, puts Nigeria as the second only to the US for Bitcoin trading, making it the first in Africa. The dollar value of crypto received by users in Nigeria in May was $2.4 billion, up to about $684 million last December. That's according to blockchain research firm Chain Analysis. Check this out on Nigeria's cryptocurrency business as of 2020. You could see that on your screen, 1.1 million cryptocurrency trades per month in Nigeria. On the Paxful platform, $65 million traded each and every month, as well as $100 million was spent on each transaction on average. And of course, $250 million was the average spent on each trade in the US. And of course, the accurate scale of crypto flows through Africa's largest economy is likely to be much more larger than what we're seeing on our screens, with many trades untraceable by analysts, especially with the federal government not regulating the market proper. Well, let's bring in a research and development economist based in Nigeria, Gospel Oberlin. And of course, we're so grateful, Gospel, that you could join us. How do you interpret the surge in crypto transactions in Nigeria?
Yeah, hi, thank you for having me. It's quite a very interesting conversation, and it calls for worry to an extent, because what we see now is just an interplay of two things. Very much more number one, poor regulation, and lack of financial systems development to a large extent, positioned to be able to catch up with global dynamics and global trend. Secondly, is an economy that is heavily driven by trade activities, as well as some level of consumption activities. And that would mean that because we do not have a strong productive base, as it were, people would naturally, or businesses would naturally resort to importation, all right, or engagements within and across the borders to a large extent. So that would call for a lot of foreign exchange sourcing and all of that. And being the recent dynamics of the global space, we realize that FX receipts and FX earnings within the Nigerian context has dropped drastically. So crypto presents a digital currency alternative, or an alternative currency option for people to both do business, either legally or illegally. So that's just the two bases upon which the hike of transactions in the crypto space are based in Nigeria.
So how is the federal government soaking this all in? Because recently we did know that there have been some ban on some of the coins, if not all of them. And of course, we're also learning about the, e-Naira, which is going to be introduced by the Nigerian federal government. How is government really responding to this out of control currency?
All right, to a large extent, the response has been from the monetary policy, the central bank. And so far, I would say that the nature of response has been more drastic and probably out of touch with context to a large extent than realistic. But then realistic can also be relative when you look at it within the context of national security issues and illicit capital inflows, through the cryptocurrency market. So yes, as we all know, the crypto market was banned in February this year, 2021, and just about a week or 2 weeks ago, some fintechs were banned as well. So a lot of like the word harsh and pretty much insensitive policies have been rolled out towards key initiatives or stakeholders in the fintech space. What we would have loved to see would have been a proper understanding, a proper show of understanding of the crypto market and an attempt to regulate. Because with the rise of the e-Naira digital currency option, it now makes it look as though the central bank is trying to monopolize the market and not really position itself to compete or to enable healthy competition for financial system development. So it's quite worrisome on one hand, but it's also understandable that the central bank entered cuts across cutting down illicit financial flows.
But here in Ghana, the central bank insists that crypto trade is illegal, just as Nigeria.
High-level institutions already accept payment in school fees through cryptocurrencies. Some other markets are dealing with crypto from a commodities angle, some others from an assets angle. So different monetary economies are already trying to question how best do we regulate, all right? And quite technically, you cannot regulate what you don't understand, all right? But in the African context, what we've seen that we lack the ability to do a deep dive, rigorous understanding of technological changes, especially as it affects the structural dynamics of the monetary economy in the sense. So yes, the action has been pretty much consistent, all right? Trying to take off or describe crypto as illegal, and on the other hand, trying to introduce an e-currency by the government born from that ban, all right, as a substitute, and in many ways looking more like a monopolistic market, because at the end of the day, they're trying to ban fintechs in that space as well. So I would want to recommend that central banks could look into that because it's here to stay to a large extent. And there are many forces that are also driving the demand for crypto. The fact that they've banned it in different markets doesn't necessarily mean that trade activities are not going on. It's still going on in the large, especially in the large parallel market space. So a lot has to be done, all right, to understand this and understand how best to manage or regulate that technological innovation or disruption vis-a-vis e-currencies.
As a research and development economist, I do know that you have, a wider scope on how economic markets are shifting across the SAP region. But what role could crypto play in the continental free trade?
Quite honestly, crypto has been able to build a level of singular markets, all right, when it comes to digital currency use and trade across borders. And this is the major philosophy upon which the AFCFTA hinged on, facilitating trade across borders within and outside within the African economy to a large extent. Now, one of the major issues that the AFCFTA also presents is the potential opportunity for a singular currency, all right, in the African market, just like you have the euro for the Eurozone. And we all know that because of the different developmental stages of financial markets in different African countries, that may be impossible in the short term and very much more difficult even in the long term. So technically, the idea of crypto or e-currency can become a reasonable alternative, all right, to reaching that level of synchronization, sort of, all right, to facilitate trade activities across borders. But we now need to agree, because every country in this context is trying to introduce their own e-currency.
Exactly.
All right. And on the alternative, crypto has positioned as singular currency. So we need to agree on what dynamics we want to go with when it comes to e-currency management and e-currency economy. Not forgetting that the SMEs who will be involved, the businesses and players who will be involved in the AFCFTA need to be onboarded correctly in terms of digitalization of that economy to ensure that this works to a large extent vis-a-vis the AFCFTA. Those are the concerns.
So finally, Gospel, where do we see the prospect of cryptocurrency within the African perspective, especially when we are lagging behind with regulation and a clear appreciation of the technicalities regarding the value chain of this blockchain technology? Where do we see the prospect?
Cryptocurrency is here to stay. Quite honestly, the prospects are low because central banks are now taking active steps to develop their own home market e-currencies. And we also need to state here clearly that the fact that you now have an e-currency does not take out the fact that the productive base of the economy is not yet informed, all right, informed enough to determine the value of that currency. Take, for instance, the e-naira does not necessarily mean that the naira appreciates because there's not an in-naira option. All right, so we need to still go back to the structural fundamentals, and the leakages as a result of this indiscipline or lack of fixing the structural deficit is what has led to the growth of alternative currencies like crypto. All right, so it's basically trying to do the dirty work in quotes of understanding the market enough to incorporate it within the context of the e-currency revolution, all right, and how best to ensure that market players are in sync with these development dynamics. But that's also to state that these pockets of e-currencies also have the potential to develop the African economy at a very huge scale.
Gospel, we're so grateful that you joined us, and we shall have more of the analysis in subsequent bulletins. Many thanks once again. He is a research and development economist based in Nigeria. Let's now talk the upstream sector, oil and gas specifically, because Italian oil and gas firm Eni has filed a suit at the International Tribunal in London, United Kingdom, to challenge a directive by Ghana's Ministry of Energy asking them to unitize Sankofa offshore oil field and Afina oil block operated by Springfield EMP, now a wholly Ghanaian upstream player. According to Thesaurus, unitization is a joint development of a petroleum resource that straddles territory controlled by different companies. And this in clear form is the explanation to what we're terming the unitization of these oil blocks. And in a statement filed by three renowned lawyers, namely Craig Tivandele, Andrew Cannon, and Charlie Morgan from Herbert Smith Freehills LLP, Eni is seeking 5 release from the tribunal. The claimant wants the tribunal to declare that the purported 9th April directive, the 14th October directive, the 6th November directive, and any other steps taken to implement those directives represent a breach of contracts under the petroleum agreement. And we shall keep an eye on this to give you updates as and when we do have them. We're trying to raise Dr. Yusuf Suleiman if he's on Zoom. We're so grateful that you could join us, Doctor. First of all, I mean, how are you soaking all this in? What does this really mean?
Good afternoon, Charles, and good afternoon to the channel viewers. Can you hear me, please, Charles?
You're loud and clear.
Okay, thank you. This is a very interesting development, and unfortunate one, of course. I wasn't thinking this will go to this extent. I thought we were going to be able to solve this locally, but we always anticipated that there's a chance that it could go international, that is to the International Tribunal. Now, what it does mean is that locally, I mean, we use our laws to ensure that, I mean, ENI and Springfield unitize. And unitization is not a bad idea. It is when field straddles. When field straddle, we're supposed to unitize. However, I mean, there are some remotely unitization sometimes can be compelled to happen, in international jurisdiction. However, it is always better and and more reasonable that unitization is done, voluntarily, especially by the agreed parties. Because what normally happens is that you need to share data, and once you are not unitizing and it is not in peaceful way, that means that data sharing is going to be difficult. So I see two impact. Number one, ENI, I mean, whenever somebody has an upstream player has court issues pending, it is always a diversionary, a diversionary activity that can impact, your way of flow and other things. You remember when Talo had the issue with, Nigeria, I mean, Cote d'Ivoire, how it impacted the production. I mean, upstream player, he has to stay focused, to the extent that they have to have, another mind to be thinking about court issues, whether they are going to win or they are not going to win. It is not entirely good for our upstream industry as a whole. So what I'm trying to say is that this will impact actually if our upstream portfolio, directly or indirectly, the direct impact that I see is the fact that, we are living in an era where we have capital discipline. And then I was thinking that we will have a way of encouraging our existing players to still stay in the industry. And so to the extent that this is now going tribunal, this is now going international, I think it's not it's not a positive development. But ENI has legal right. It is within their legal remit to seek redress, in the international tribunal. It's going to be very difficult, going forward, and we'll see how it pans out as we go forward.
Well, just before you leave, excerpts of, the occasion court is the fact that this was a forced unitization.
Yeah, clearly, that's what I'm saying. It is almost like a forced one, because a forced one in the sense that, as I mentioned to you, before fields unitize, and if we confirm that the actual straddle, that they communicate, they have to unitize. Now, by unitization has to be voluntary. It has to be like the two parties have to be willing. But in this case, I think Springfield was willing, ENI wasn't willing. So, and if unitization has to happen under these circumstances, it means it is compelled to happen. And that is not so good. That is not so good at all. And so, but unitization is a good thing, Charles, if the two parties agree, because sometimes some fields operating them independently will never be, you'll be able to optimize the extraction of oil from the ground. So I was of the view that if this could have been solved locally, that would have been excellent, because now what we suspect is Springfield, maybe their field, if they want to operate it independently, there is not going to be, they are not going to optimize oil production. And one advantage about unitization also, you can use one field, Charles, to be able to extract oil from another field, from another area. So assuming they will agree to unitize, and it is very peaceful, they could use ENI platform and then extract oil or reserves that are within a Springfield area. That's the advantage. It saves a lot of costs instead of building another platform. And then the whole thing is that, like I mentioned, one sometimes operating unit independently, you will not be able to optimize. And I think that may be the reason, that may be the problem where Springfield is in. Right. Maybe the field is confirmed that it cannot be optimized when operated independently unless it is unitized. But it has to be done. It's always good for it to be done, voluntarily by the two willing parties. Unfortunately, it's not happening. So we just hope that things go well, so that our upstream. My bane is about our upstream, Charles. Our upstream is now crumbling. It is dangerous.
Exactly. So we shall see
we
shall see how this pans out, especially as we also get response from government in our subsequent bulletins. We're so grateful, Dr. Suleiman, for your expert analysis on this developing story where ENI has sued the government of Ghana over what it claims to be a forced unitization of its oil block. But away from that, general art students of the Jamal Pensan Senior High Technical School have won the Renewable Energy Contest for the Northern Zone. Led by two girls, they won with an innovation that generates electricity from plants, bacteria and soil. The challenge is an initiative by the Energy Commission and the Bui Power Authority to inculcate in the students the skills to develop pragmatic solutions to Ghana's energy challenges. Prince Apia witnessed the zonal contest and now reports.
It burns longer than the traditional charcoal. Next slide.
8 schools representing the northern sector participated in the zonal competition held in Kumasi that brought out solutions to Ghana's energy problems. After more than 5 hours of fierce display of innovative solutions, Jamal Pensan Senior High Technical School emerged winners. Having won the regional competition weeks ago, they had to beat Achinswa SHS and Navrongo SHS for the zonal title. General Arts students Janet Oheman Kansa and Christolov Mogo Arthur led the renewable energy team.
At first, our school was low, but now after the regionals and with this one, our school is going and everybody is beginning to know Jamal Pensan Senior High School. So this project has brought a lot of things to us.
This project means a lot to us because it can even pave way for us to join or go into the engineering work. Although it was for science, but we are general students, but we offer integrated science. This is not taught in class, but it can also help others who don't offer science to join.
You're still watching The Marketplace. We're taking a short break. We'll be right back. Do stay.
Hi, this is Lexus Bill, host of Drive Time on Joy 99.7 FM. Listen, you don't have to worry if you miss Drive Time or Personality Profile. It's going to be live on our podcast page. Just log on to www.myjoyonline.com/podcast. You can listen to Drive Time, Personality Profile, and any other of your favorite shows on Joy FM on that page. You don't have to miss a show at all. Joy 99.7 FM, radio for discerning listeners.
You're welcome back, and I trust that you have been updated on all the business stories that we brought your way. We shall follow up on the developing story regarding the suit against the government of Ghana from the ENI over what they claim could be a forced unitization of the oil blocks. We shall also be giving you updates from the Power Ministry. The Minister of Energy actually has been making some remarks regarding Ghana's upstream sector. We have more updates on that at 5 p.m. In the meantime, we're grateful that you could join us, and for more news, you log on to myjoyonline.com/business. I'm Charles Aite. Enjoy the rest of our programs.